massive hello to everybody. How's everybody doing? Rocking and rolling in a free world. Here we go, here we go, here we go. Doing a quick video Wednesday morning, 28th of June, 2017. No trade calls and recommendations. Everybody responsible for their own stuff. So here, get ready for basically central bank day, right? We've got a lot of speakers on deck. Should be interesting. Again, potential for moves. We've got Polo speaking, we've got Draghi speaking, we've got Carney speaking, we've got Kuruda speaking, right? We also had crude oil inventories out today, so that should be fairly interesting. So what's going on here? Now, we usually don't talk about this, but since I did mention it in the public setting, I just wanted to update on this. So the other day we were we tried to get aggressive here, and we shorted bonds and NQs. And as I mentioned on the Twitter feed, just to let you know, I'm pretty much done here on the bond shorts. Right, the trade's finished here. There's just a little hedge on the Nasdaq position. We'll have to see what happens, but you know, still holding Nasdaq, no change. If it was just for the scalp, I'd be pretty much flat or trailing aggressively, but the bigger swings are still in play. So what's happening here? So we discussed basically how we've been going on about the fact that we feel that equities are very, very toppy, very, very heavy, and we felt that something had broken on the NASDAQ, right? So that call hasn't changed, and you see that basically things are starting to basically try and get a little bit of traction. So if we're looking at the SPY, right, just to give you an idea, this is still just a little bit of noise, right? Unless we start to break back below 240 level, is just a little bit of noise. Now it could easily accelerate into something more aggressive. That's what we're looking for, but you have to be careful not to get carried away, right? There's still a lot of support there. You can put on all your moving averages, and you can see most of the charts are have a date with a 50 DMA, right? So that's what everybody's going to be looking at. So the focus is going to be day close above or below. If we get day closes below those 50 DMAs, then we can get a little bit of traction. And that's fairly similar across the board. We've still got this, you know, the Dow shorts in play. We'll have to see, unless we get back below this breakout zone again. Difficult to call it as very aggressive, right? It's just a little bit of a healthy retracement here. The weakest is the NASDAQ. You know, we discussed this. We said something had broken on this action. We had that kind of crashy action on Amazon across the board. So we felt that that was the break, and that this was the only indice that warranted being aggressive on add backs on the shorts. And you see here this move back into that previous gap up zone got sold hard. So this is very constructive, and especially if we continue to hold below here, we expect this to continue to motor lower and try to play for a much bigger correction. Gold, what we discussed on where's gold? I'm just trying to go quickly. Hopefully this is going to be quicker than a blog post. Let's see. So gold, what we mentioned on gold was in the Sunday outlook is that we felt this was going to rotate higher, but we felt that it was in a very choppy zone, and we wouldn't be surprised if we came down and we cleared all these stops below the 200 DMA before reversing higher. And again, this is a little bit of a gift from the gods. I tried to make it clear on Twitter, you know, those low liquidity stop hunt, seek and destroy mission on low liquidity in the overnight sessions, usually, unless those are on big news, we like to fade those aggressively. So this is a nice little chance to fade that even for a $10 pop on the contract, or add to the longs, you know. And as long as we continue to hold above that 200 DMA, we still think this rotation is in play. We've got a date with a 50 DMA, and the next move will be either close below that 200 or close above the 50. We close back above the 50, we're in play. We close below the 200, then very heavy, as we discussed on Sunday, for these lows to come into play. But especially if equities continue to hold heavy, then we'd expect this to get a little bit of traction, right? What else have we got? Kiwi. So we've been talked about it on the blog post too. We've been stalking Kiwi, trying to get short Kiwi. That was a play up for Monday. Nice little scalping opportunity on Monday, and again, nice little shorting opportunity yesterday. So this is the familiar chart we discussed, right? We'll have to see how things trade here, but clearly this has been fairly constructive to the short side. and we'll have to see if this can get some traction. The weekly negative close would be really nice. For now, we got a daily close. It's not that pure, but you see how it's clearly struggling at those highs. So what we would be looking for is confluence of, you've got a 50 back of this move up and all these moving averages, the 50, the 100, the 200 attracting here. So as long as we can hold these highs, we'd be looking for this to come right back in and give us a nice little opportunity to trade this back into the mid. If you want to be very aggressive on this trade, clearly there's the opportunity to play for, continued move down, but for now that would not be our base case. For now, we just be looking for a move back into mid. What else is going on? Crude. So we've been looking at crude. We said that we're still fairly bearish on crude. We said that the healthy move would be to see some kind of a pop here all the way back potentially into the 45s, but we'd expect to see aggressive selling to come in here unless something comes out of OPEC, unless something changes in the data. So right now we're just getting a little bit of a healthy bounce. We'll have to see what happens with inventories today. Clearly, if it starts to squeeze, or especially if it squeezes on something that should be bearish, I'd be very careful to the short side. So game on here. To the upside, we could easily we've got a couple of bucks to the upside, $2 to the upside here. And if the data's not that great, I wouldn't be surprised to see very aggressive puke lower. So again, a little bit tricky, but we'll have to wait and see. We got a lot of move here, so it's not surprising that we're pausing a little bit. So that should be fairly interesting. DXY, what's happening on DXY? So DXY continues to get sold. Not to sound like a broker record, but remember we said the healthy move would be up, but nothing has to happen in the market. So don't be surprised if it continues to go down, and don't be surprised by any kind of velocity of move inside this range, because it's just chop, right? Above it could get aggressive, below it could get aggressive, but inside it's just chop. And you see we've stayed inside, and now this is the focus. We get daily closes below here. We get aggressive traction below this, especially after all these central bankers are on deck today. Well, there's no reason why this can't aggressively move lower. Remember, we've got a date with those across the board. We're looking for these extremes printed on election day in November to get challenged again. So that's no change. Our base case is still that this is a big move lower. All those shorts were still in play for ultimately a date and unresolved business at that November low. Then it really gets interesting. In terms of yen, we got a very funky move on yen. I think it's confusing a lot of people. Again, let the levels guide. We'll have to see what happens here. We're very much focused on this because we think if the equities sell off very aggressively or get some traction, probably the most asymmetric risk reward out there, unless you're already in one of those equity shorts, is to try and get short yen. So that's something we're going to be focused on very aggressively. Now, the other thing I have to discuss, because it's something we've been looking at for some time, and on the blog too, is all these stocks on tech stocks. Beautiful risk reward to the downside on Amazon. Again, we said any move back below that 1,000 was a nice little shorting opportunity. Very tight risk to the upside, but this could really move. So this is in play. So keep an eye on these tech stocks, right? Very heavy. If it accelerates, bulls really have to catch it here. If not, it's going to start to look very heavy. Probably the heaviest one, or the one we've been looking at, we've been discussing is Apple, right? If you see the action on Apple, right, what we had here was basically this huge ramp and then complete failure to hold above here. Puke, couldn't rally despite other stocks rallying, tried to pop again, couldn't rally again, and now it's holding heavy. We take out these lows, we'd be looking for this gap to fill very aggressively. Then everybody's favorite short, right? Favorite long or favorite stock to love or favorite stock to hate is Tesla. Tesla's looking particularly weak here. We've warned about trying to get aggressively short here because it's just, pure widow maker, but sooner or later this is going to come back to reality. So again, watch this zone here. We start to clip below the 350s. We would not be surprised to see this $100 lower. Okay, And you can see this across the board. The other thing, again, we got Google selling off yesterday, Nvidia looking heavy again. So it's something that's starting to materialize across the board. Euro, really no big change to our outlook from last December, right? So we continue to say that we felt that this was a very clear sign that it was uncomfortable getting any traction lower. It couldn't attract any new sellers at lower. And our trade for the year was basically to see Euro come all the way back into the 200 DMA. At the time speaking, it was a bigger move because it was higher up, but the 200 is coming here. So that hasn't changed for us. We're still looking for this. This trade is in play. These highs are attracting. So it could be choppy all you want, but our call hasn't changed for the year. We got a lot of wheeling and dealing on cable, and basically here heads up around this 128. We discussed the fact that as long as it could hold below the 128, it would be heavy. Above the 128, this could really catch a bid and squeeze higher. So this is going to be very interesting today. We've moved all the way back into that 128. Very funky action, but again, it is what it is. Look at this, day close above, we'd expect it to try and squeeze all the way back at the 130s. Day close below, any aggressive selling today will be pressing this, trying to get a move back into the 126s. Okay, so hope that was useful, guys. Thanks for following, thanks for sharing. Got to get to work. Have an awesome one. A lot of charts waiting, a lot of positions waiting. Take care, talk to you soon. Have a great day. Heads up for all these central bank speakers, and again, all the best. Thanks, guys.